Alright, what's going on, guys? I wanted to share this model with you that can pretty much change your life. This is how I will be structuring all of my trades going into 2025. Um, all it is a higher time frame key level tap. The PD array has to be an hourly PD array or higher, preferably 4 hour or higher, but hourly can work. But the hourly is most likely not going to give you the weekly expansion unless you're in like a super uptrend or downtrend. And an example of that would be election week. If you guys go back to your charts and look at that, but there's a reason. There's a news catalyst. There's a reason why price is going to continuously spool higher, right? Because of the election, seasonal tendencies, etc. But if you're stuck in a range like we were here, you're most likely not going to get your expansion out of an hourly PD array without the key level already being tapped, and then you need another key level being created and then used to go higher. So that's what happened here. So if we go out to our weekly time frame, we can see that price has just been sitting inside of this lower weekly fair value gap here. And so that to me is pretty bullish. If we would have inversed both of these or closed below both of these fair value gaps, that would have also meant that we would have closed below this weekly order block. Then we would have closed below the consummate encroachment of the weekly order block. That would have been very bearish to me. But also, bull markets don't just end like this, right? We're not going to just top in one day and then go higher and go lower, right? This was that FOMC, I believe. But regardless, we have our key level tap, and then now we go to our daily time frame. Obviously, this candle wasn't here yet, so we can remove that. Then we go to our 4 hour. We have any PD arrays being created, and you want to pair this with SMT if possible, and we actually did have SMT here. NQ took out this low from December 20th, ES did not, so this is where your bullish SMT occurred. And so now we can go to the 1 hour. So price is inside of that weekly fair value gap. This is that lower wick on the weekly fair value gap. This price action in here, you can see that we have this big manipulation on the hourly time frame. And this occurred at what time? 12 o'clock, that's a key time. And so now we have this 1 hour FVG bearish fair value gap being created. We're going to make this lighter color so we can see everything a little easier. So we have the consummate encroachment of the order block, SMT at the low, low being created at a key time, and then price is displacing through this area, right? Closing above the order block CE. Now we're at the fair value gap weekly CE, and now we have a fair value gap, hourly fair value gap being created. So now, what does this tell me? Most likely, price is going to be bullish until this range high. There's no reason to stop anywhere below here if we're on sides. How do we know that smart money is buying down here? The SMT, that's where the Kraken correlation occurred. So if you want, you can take more precaution of waiting for this inversion to happen, but you can see that you would most likely miss this trade unless you just get in here and then your stop loss is at this low. But that to me is not a great trade. But ideally, you want to be entering inside of this fair value gap here, and your stop loss would have to be below. This would be where my stop loss would be, the low of this candle or the closure of this candle here, and that is also below this wick CE on the hourly. And you can see our first take profit isn't all the way until previous day high, which is normally what occurs, right? So now we have our reversal being put in, we have our hourly PD arrays being created, and now you just let price do its thing. And then you can see we got our take profit hit right at 11 o'clock. And how do we know that and say you're in this trade, right? And this is your candle that was printed, and you're like, oh, how do I know I'm on sides, whatever? How do I know this isn't just manipulation, whatever? Since you have accumulation, most people are looking at this as accumulation, manipulation, and then distribution, especially since these lows are so clean. These do not need to be tapped into. Ideally, this fair value gap stays open. You can see it did. Even ES did the exact same thing. And um, now we have the hourly CSD above the actual important candle, in my opinion. Here, this is your biggest manipulation. Large manipulation equals large distribution. So always remember that. And you can see every down close candle that's getting closed above is acting as support pretty much for the most part. And so this works in many other instances. This is how a lot of my trades structured. Like I said, this is an instance where you would not want to do this because there's no SMT and we're stuck in a range. So if you look at the daily, you can see that this candle, all of these candles here, we're stuck. Well, not this one, but this candle here, all this price action was stuck inside of this range. So to avoid any of this, and you can see this, the price action on Tuesday was not great. The delivery was pretty sloppy, but you can see that the trade idea still worked, right? But if you pattern trade it, you're not going to have any kind of success. So you can see this here, right? We have a sweep, or we have a tap of a key level. What did I say? This is an hourly fair value or hourly breaker, right? So we have an hourly breaker, low created at 10 a.m. You zoom out, you have a 4-hour order block created at 2 a.m. Another key time. You zoom into the 15-minute. You have a 15-minute CSD here, 10:15, closure above. You can buy this order block, stop at the low. This works, right? You can see you would have had a profitable trade. But what did I say? If we zoom out and we look at where we are, what's the probability of us continuing to expand, taking out all of this, displacing through all these PD arrays without taking out the external range low? Most likely not going to happen. Especially why? Because we just had this huge run non-stop, and then now we finally had some rebalance from FOMC. Yeah, that's what that was, that 1,000-point drop. And you can see once again, you have key level tap, first key level tap, right? And you can see the next time this occurs, I'm pretty sure this fails. This hourly breaker fails next. Yeah. So once again, still offered a run, right? Inside of this hourly fair value gap, first hourly fair value gap tap, bullish environment, most likely going to give you some kind of trade. But same thing here, tap into our hourly PD array, hourly CSD above here, breakaway gap, price goes into what? Any kind of objective that it wants into a premium. You'd see this was above midnight price, rallies until it wants to stop. And so if we look at other examples that would normally work and continue to work without even looking at SMT or anything like that, what do we have? We have a range. Range low is swept. Let's go into replay. Range low swept. Here's range high. Bullish environment. We go out to daily. What do we have? Weekly. Nothing, right? Just straight upwards delivery. Here's our daily. People see this here as a wick through this low. People think that we have a market structure shift. We're going to go lower. And you can see open high candle. People think this is your order block. No. We're in a bull market. No reason to fade higher prices. You can see price never even closes below this low. So that's a good sign, right? We go back into our chart. Here's our daily key level. We have Tuesday, which takes out Monday's low. So previous day low swept into what? Daily key level. That's your daily fair value gap. That's all you need. And now what can you wait for? You wait for an hourly change in the state of delivery. Ideally at a key time. So here's 2 a.m. We get a candle closure above. That's all I'm looking at. This low should now be protected until some kind of premium array or the range high is met. So this is all fractal, right? So this was that soup. This was that turtle soup. Look at all these relative equal lows with the daily fair value gap. Previous day low, Monday. Right here. Make that blue. And then now what do we wait for? Up close candle. We wait for a down close candle at a key time to get closed above. What do we have? Stop run into here. All these lows. Hourly fair value gap. Candle closure above here. And then price delivers. All because of what? We have a catalyst. We have high impact news this week. We have range highs as targets, and we have a turtle soup on the daily time frame. So once you have a turtle soup on the daily time frame, there's no reason for another one. And when you're all you're experiencing here and all you're targeting is this is just a fake move. The big aggressive moves are normally your fake ones. That's how they scare everybody out. And you can see this was range low, this is range high, and that range high gets hit very quickly, which is right here. Which was also on Wednesday, you can see this was Tuesday's previous day high. So you can see how that all works. Previous day high and lows, previous weekly high and lows, previous monthly high and lows, and you can even use, and then you want to use your key times. So all your news releases, 1:30, 2 o'clock if it's FOMC, but normally just 9:30, 10 o'clock, 11, and then 1:30, 2 o'clock if there's FOMC, and then sometimes you can see the markets hop around 3 o'clock if we're in a straight buy model. But this happens over and over and over. I'm gonna show one more example. But all you have to do when you're inside of this kind of trading environment is wait for an obvious run on stops, obvious manipulation, and then wait for your time to enter. So you can see this daily order block closes above here. So this is your new key level. Thursday, reversal profile into the order block. Now we can go, we have a key level met. So now we can anticipate Friday to do what? Go higher, at least into a profitable trade, a 2-hour trade in your system, or you can target the previous day high, right? So let's go into the 4-hour. We're inside of this. Here's your 4-hour breaker as well. This is your breaker block. We'll just make this like this. Here's your 4-hour breaker here. Now we can play price. This is still Thursday, still Thursday, still Thursday. Here's Friday. So we go the 1 hour. What do we have? Failure to tap the breaker. That's very bullish. Price comes down into what? This is your new day opening gap here. Right here. And you can see prices inside of this. Big old gap. Or you can just focus on the order block. This is your down close candles. Price sweeps liquidity. Fractal external range low. Closes above. This low should now be protected until what? These smooth relative equal highs and the range high most likely. This is previous day high, so that's a good target. And you can see this move pretty much occurs overnight. And if you want to, and this is why you don't chase price, right? Dole was met. It's a Friday. Previous day high was taken. There's no reason to chase. And you can see why, right? There's no reason to continue to really go higher. The weekly objective was met. So this is why you don't want to just get burned like this. You have to wait for some kind of stop run, and then you want to be looking for price for lower time frame bullish signatures for you to go long. So obviously it's not as plain as black and white as this made it. That was just 3 examples of it working, but just use time frame alignment and then use your Forex Factory calendar, the high impact news, and then pair that all together, and then just wait for price to sweep a previous day high and low, a external range high or low, tap into a daily key level, and then look for an hourly or 15-minute change in the state of delivery, bullish or bearish, and then enter on on whatever time frame you'd like. But I hope you guys enjoyed this, and I'll see you in the next one.